Hello everyone, sorry for being late with the update today. I'm just going to run through 4 tickers and then next week we can have a look at more coins again. Let me just clean up the chart a little bit. So the liquidity beneath these lows has been taken, at least the initial stop loss hunt has been carried out. I did enter a long position at 25,200. As I mentioned in previous videos and also on Twitter, my target for now is a generic one, the top of the channel here, or even this resistance area at the top. I will look at the price action, how it develops, and then decide where to TP. And I moved my stop into profit just to secure the position in case we get another sweep of the lows. But we have to now look at the upside a little bit, at least temporarily. So first of all, there is something like a wedge pattern developing here. But more importantly, there is a lot of liquidity above each of these lower highs now, which could be swept next. And once that move happens, we will have to see if we will reject somewhere and then just take out the lows again and drop towards 24,000, or maybe if we can flip some levels and then hopefully look at some upward momentum again. But currently, I mean, not Bitcoin per se, but currently the whole crypto scene looks a little dark. Yes, it is usual that everyone feels down at the after capitulation and at the bottom, and there have been some news about BlackRock applying for a Bitcoin spot ETF, etc. But we have heard all those stories before. So until regulations are clear, I don't think anything will come out next week. So yes, interesting developments, not new developments, but these will take time. So no reason to FOMO buy right here or YOLO all in. I'm currently positioned long, and if it plays out, I will TP somewhere in this area. I'll keep you updated. For now, my position is already secured with stop loss in profit. ETH, let me turn on the auto levels. So ETH has dropped beneath the 1700s level and now has been bearish retesting it for the last 2 days. This is a potential resistance now, together with the 1800 level, of course. So at the moment I'm not in any ETH position, since, as I mentioned in my last video, I got stopped out of the long I attempted, and now I'm basically waiting for either a flip of this and then I will think about longing towards 1800, or if something like a bear flag starts forming here, then we could see the liquidity that will be building up under all the higher low wicks to be swept to, and that could actually carry us towards 1600 or 1580 or so on, or so. So I'm currently cautious on ETH, and I will be monitoring the situation and keep you updated on this. Next, I would like to have a look at the SPX, which is the S&P 500. The stock markets have been outperforming crypto recently. Yes, there is additional FUD, like regulatory FUD in crypto, which could be holding us back. And there are some people who expect that crypto may catch up with the stock markets. Whether or not that will be the case remains to be seen. I'm not going to speculate about that. But one thing I want to point your attention to is that the stock market, everyone is bullish right now. Bears are capitulating and are made fun of, and everyone is talking about new highs and like longing here. This is the key retracement region of the Fibonacci retracement tool, the 0.702 level and the 0.786 levels. I have mentioned them before, are key retracement levels where the risk or the potential of a rejection peaks. It is just enough from the bottom to get everyone excited. Bears capitulate, they flip bullish, and the media starts coming in, and that's usually, I mean not usually, but at least there is a high risk of it making a U-turn somewhere in this region. So if you are longing the stock market, be aware of the current risky zone we are in, and the same is the case for the Nasdaq too. Currently a little bit higher than the SPX in terms of Fibonacci retracement levels, but also in the relatively high risk region for a U-turn to occur. So if you are in longs, I would recommend you to protect your positions with a stop loss at break even if you can afford so, and not long too much based on the euphoria. I mean, I don't know if we can call it euphoria, but the positive sentiment in the stock markets, especially with tech companies. So once these 786 Fibonacci levels get flipped to support, okay, then we can turn bullish on the markets, and all-time high actually gets likelier. But until that happens, there is no need to FOMO long stocks at this point. Okay, that's it for today. Have a nice weekend, and I'll see you again next week.